Hofstra Votes is a civic engagement campaign that was created to educate members of the campus and surrounding communities about political and policy issues and to encourage them to register and vote. Hofstra has a robust tradition of providing academic and experiential programs to learn about and participate in the democratic process, including being the only university to host 3 consecutive presidential debates. We'd like to welcome you to our Hofstra Votes podcast.
Hi, everyone. Welcome to the latest episode of the Hofstra Votes podcast. As always, we're broadcasting from the studios of WRHU Radio Hofstra University, Hofstra's award-winning student-run radio station, which you can find at 88.7 FM. Today, we're welcoming Hofstra's Provost and Senior Vice President for Academic Affairs, Herman Berliner, to the program. But today, we're asking Dr. Berliner to put on his other hat, which is as a distinguished professor of economics and former dean of the Zarb School of Business, and hopefully to help us make sense of what's going on with the economy.
Oh, you expect me to make sense of the economy?
Well, yes. You're gonna explain it all to us,
okay.
Herman.
I'll do the best I can.
Okay, great. So as you noted, we've got a lot of ground to cover here. But I thought the best place to start would be with this morning's news, which is the August jobs report. 130,000 jobs created in the month of August, which, well, it seems good. But as I read some reports this morning, people were suggesting that perhaps it was not as good as expected. Certainly job growth has been pretty steady in this particular administration. Is that a good measure of the health of the economy?
I think when you have a jobless rate of 3.7%, that's a good measure of a very robust economy, which is what we still have. Is the economy slowing down rather than speeding up? That could be the case, but you're very, very strongly positioned with that low an unemployment rate.
Okay, great. So the economy is still robust. However, as we've seen in the month of August, there were some other indicators that folks thought were presaging a recession. The Dow stock market, which gets a lot of coverage, is up and down, very volatile. And there was something called the inverted yield curve that emerged as a term for, those of us average Janes and Joes in news coverage about the economy in the last month, which, as I understand it, is when short-term bonds start to pay better than long-term bonds.
You really sound like an economist. I'm very impressed. So let's go back a step in terms of the Dow. The Dow's been going up, the Dow's been going down, but the Dow really, at the end of the day, tends to average out at roughly where it was before. So we have not had a sizable decline. We haven't had a sizable increase. So within a lot of fluctuations, there still is relative stability. Now, in terms of the inverted yield curve, think about it in terms of interest rates rather than bonds. So what it's saying is the interest rate on short-term, the short-term interest rate is in fact higher than the long-term interest rate. Normally it's reverse. Let's say that you're borrowing money. Short-term, you would expect everything to be relatively predictable and there would be a relatively low interest rate. Long-term, when you're really uncertain about the future, somebody's lending you the money, you're borrowing the money, there's an interest rate involved. That interest rate tends to be higher because you have to pay the person who's providing the funds for the risk involved. The longer the horizon, the greater the risk. So it is very unusual when short-term interest rates are higher than long-term interest rates. It shows that there is some concern about the economy short-term, and I think there is. And the cloud on the horizon short-term is really this conflict that we're having with tariffs and the worry that it brings on in terms of a lot of people in this country.
Okay, great. So you've managed to do the segue that I wanted to do, so thanks for that. Along with some of the volatility in the Dow and the stock market, we have the volatility of trade policies and tariffs on imports from China and I believe Mexico, although certainly the tariffs on Chinese goods have gotten most of the news coverage. Does this make sense in terms of long-term economic strategy? Certainly, this particular White House administration argues that it does, but isn't it hurting a lot of businesses in the short term?
It is hurting a lot of businesses, but let's go back a step. There's a huge trade imbalance with China. We are importing so much more dollar value than they are importing from us. and it's a ratio of 3 or 4 to 1. So it is a huge difference. So there's a desire to narrow that difference, that to some extent China has used some unfair trade policies and procedures, and to try and come closer to a balance. China is buying our soybeans, they're buying our cars, we're buying household appliances, we're buying electronics, we're buying a ton of stuff from China. It's a huge imbalance. When you deal with two economic superpowers and one imposes a tariff, it is very likely that the other superpower will also impose a tariff. A tariff is a tax. What it effectively does is raise the price of the product or service or whatever it is, product in this particular case. Okay, you raise the price, you tend to sell less, people are buying less, they may be cutting their profits. It's not a great situation. So one country raises a tariff, the other country raises a tariff. Is there then a discussion and an agreement on rolling back those tariff increases? Or, seems to be the case right now, there's no resolution at that point, and so there's a further increase on the part of the U.S., there's a further increase on the part of China, and once again, we're raising the price of products that people in this country are buying and people in China are buying. When you're dealing with two economic superpowers, you can have a standoff, but the bottom line in a standoff is that both countries lose. So what needs to happen is there needs to be a discussion, probably not in the newspapers. There needs to be a discussion and some understanding of a common ground that will allow both countries to roll back some of these tariffs. That would be in the best interests of both China and the United States. Mexico is a different situation. You're not dealing with two economic superpowers in that case. You're dealing with one economic superpower that wields huge power, the United States. Mexico is not anywhere close. That will work out, and it will work out to some extent in terms of what the United States is looking for.
Okay. So you were talking a bit about how we're at essentially a standoff with China now over trade policy. But there's been a lot of public pronouncements by both countries, by leaders in both countries about this trade war, so-called. And, the stock market seems to, react as it does every time this happens. And I know you said that the stock market, the Dow tends to sort of find its level.
Yes.
But is there some danger in the volatility, even if it eventually finds its own level?
The stress is clearly there. And I think the stock market is a good reflection of that. There's bad news, tariffs go up again, the Dow goes down dramatically, there's some announcement that conversations will take place, the Dow goes up. And I think that exhaustion level that you're talking about is starting to set in because it's happening repeatedly. So that's not a good thing. But I'll go back to what I said. You're dealing with two very strong countries that are standing their ground, and it's creating a very uncomfortable situation. Offline, there has to be the kind of negotiations that lead to some easing of the tension and some rolling back of the tariffs.
Okay, so if I'm an average person, a student here at the university, a member of the community, and I'm looking at my future job prospects when I graduate, I'm looking at my stock portfolio, I'm looking at my 401k, and I'm seeing the various reports about different economic indicators, whether it's the stock market, the trade wars, the inverted yield curve. How do I understand this? Not to mention, and we haven't even gotten to, the battles between the president and Jerome Powell, the head of the Fed. As the average person, how do I suss this out? What does it mean to me, and what are the indicators I should be looking at so that independent of all of this noise, I can figure out whether or not I'm good, whether or not I'm okay?
So first of all, we have no average students. All our students are clearly above average and are much more sophisticated in analyzing any situation.
Fair enough.
I think our students, soon to be our graduates, should look at the long term. If they're going to look at the Dow every day in terms of how they're doing or some other indicator that tends to go up and down continuously, they're just going to build up their anxiety level. They're in it for the long haul, assuming that there are no wars or major natural disasters. the trend of the economy will continue to be positive, and we will continue to move forward. So I think our students can take some assurance that though they're investing money that they won't need for years, that money will be there and there'll be a nice gain at that point in time.
Okay. How about for the average listener, maybe a head of a household or a 30-something, somebody who's close to retirement? Obviously, their situations are all different, but is there something that they should be looking at that they can anchor their understanding of the economy on?
There's a basic rule as you go through all those stages is as you get closer and closer to retirement, take on less and less risk. So with any investment you make, go from something that is more speculative to something that is much less speculative. That's the best way to position yourself. That's the best way that you can actually prepare.
Obviously, that's the case regardless of what any of these economic indicators are doing.
Yes.
I guess we'll just ask it directly. Are we on the brink of a recession?
I don't think we're on the brink of a recession. I think recessions happen periodically. There will be another recession. It's basically the case of for the moment in time, an economy runs out of gas. And a recession just means moving back from growth. So it can be a very mild recession where you just stop growing and very slightly decline for 2 quarters of a year. Will we have that again? We definitely will. Is it imminent? It isn't. Will it likely happen within the next 2 or 3 years? I think it will.
Is there anything that can be done at the federal level that will either lessen the impact of a recession or something that could speed up it coming or make it deeper?
So hopefully nothing will happen that will speed up its coming or make it deeper. And there definitely is policy, both monetary and fiscal policy, that can moderate a recession and to some extent even prevent it from happening. So the monetary policy would be changes in the interest rate. If you lower the interest rate, it stimulates more investment, which tends to stimulate the economy. That is what President Trump is pressuring Jerome Powell, the chair of the Fed, to do. Mm-hmm. So that's definitely a possibility. Now, in an economy that's doing as well as this economy is doing, with an inflation rate as low as this economy's inflation rate, at this point in time, I don't see a need for the Fed to act to prevent anything that isn't clearly imminently happening. There's also fiscal policy, which is government taxation and government expenditures. You can moderate or eliminate a recession by government spending more. You can moderate or eliminate a recession by government taxing less. There was some talk in recent weeks about the federal government suspending the payroll tax. That gives us more spending power, and that counters any tendency toward a recession. So there are always policies that can be followed, but every policy has also the issues and concerns that are raised as a result of it. So let's say government taxes less or spends more. The national debt goes up even faster and higher, and ultimately that's a debt that concerns some people. It doesn't keep me awake at night. A lot of us have debt. It's the mortgages we hold and the cars we buy. So debt is not an abnormal thing. There's a point at which the debt is accelerating too quickly, and then that starts to undercut the confidence in the economy.
It's interesting that you mention the debt, because that's certainly also been a topic of conversation nationally. The country has seen the debt rise faster in this particular administration, and there have been some folks sounding an alarm saying that we're saddling the next generation or generations with this huge amount of debt that eventually bills come due. So now you're saying it doesn't keep you up at night, the idea of debt, but are we on the line here with that?
I think the debt is going up relatively quickly, and at one point that needs to moderate. I think we're still fine. As long as the economy is still growing, as long as the economy is still robust, there's not a reason to be overly concerned about the debt. The debt is not holding us back in terms of doing what we need to do. And having some debt is really not a terrible thing. It's for a lot of companies, for a lot of individuals, it's part of the norm.
Okay. Is there anything that you, as an economist, look at and say, this is my leading indicator, something that maybe folks don't know about, something that doesn't necessarily get the same type of coverage as job reports or the Dow, a metric that you feel is especially reliable that you can kind of share with us and say, hey, if you're really interested in gauging the relative strength or weakness of the economy, these are the numbers you should look at?
I look first at the job picture, but with an understanding that it's a very flawed indicator. So why is it a flawed indicator? Because you're considered employed whether you're working full-time or part-time. And you're considered employed even if you're working at something at much less than your skill level or education would suggest you should be working at.
So you're underemployed.
You are, in fact, underemployed. So I recognize that it's a flawed figure, but I am very pleased that we're at 3.7%. 4% is still the historical benchmark for full employment. There are always people that are between jobs. That's part of that 4%. There are always people that really aren't a good fit with the labor force, and that's also part of that 4%. So this is a remarkable indicator of how vibrant our economy is. On the other hand, I look at the trade imbalances as an area of concern where I would like to see that gap being narrowed. And obviously, I would like to be in as much of a free trade environment as we possibly can be in.
Why don't we get down to brass tacks and say, so what do you think will happen and when? Make a prediction.
Wow, a real pressure question.
Make a prediction. Can you? Is that even possible?
Oh, I can. Will it be correct? That's a different story. I think there will be a recession within 2 years. I think it will be very mild. I think it will be the economy running out of steam, and it will just happen. And then I think there will be a quick recovery. Now, the asterisk or fine print or caveat, there are external shocks to the economy that can derail an economy. And obviously, I have no way of predicting whether there will or will not be these external shocks. So what's an external shock? An external shock can be a war, a rapid increase in terrorism, a natural disaster. All of those could happen. But absent that, I'm not predicting that, I think this economy is good for another 2 years, doing very well, and then a very soft landing and relatively rapid movement forward.
So a mild recession and a soft landing, what does that look like for the average consumer?
It looks like a slight increase in the jobless rate. It looks like the growth of the gross domestic product will moderate. It will be, in effect, 2 quarters without any growth. But it can be down a fraction of a percent and meet that definition of a recession. And then, assuming that the Fed lowers the interest rate, I think the economy will bounce back relatively quickly and will be coming back from a position of strength, even though we're in a very mild recession.
So it sounds like, for the most part, you feel fairly comfortable and confident at where the country is economically at the moment.
I'm what you would call an optimistic economist.
Fair enough. So now, before we let you go, we like to do something at the end of the Hofstra Votes podcast called Bullet Poll, where we ask you a couple of quick, fun questions. So for your bullet poll questions, Herman, I'm going to give you a little intro, because it's possible that our listeners do not know about some of your interests outside of the economy and being provost of the university. Dr. Berliner happens to be a huge fan of chocolate. In fact, he at one point directed an academic conference called Chocolate Food of the Gods. Is that right?
That is correct.
And he also has a vast collection of dreidels. How many now? 400, 500?
Yeah, between 400 and 500.
Okay. And finally, he is on the board of directors of the New 42nd Street Alliance. Do I have the name of that organization correct?
It's now called the New 42nd Street, the New 42. Yes,
okay, the
correct.
New 42, which is an organization that works on the continuing revitalization and development of the Times Square area.
The reason I'm on the board is when my kids were young, I basically took them to 10 shows for kids a year.
Wow.
In a theater that's operated by the New 42, which is called the New Victory. And I schlepped them together with a diaper bag for years. And I am a huge fan of theater. I try to see every musical. So I came to their attention, and it's really a lot of fun. The New 42 provides theater experiences for 40,000 kids a year, and I think that enriches their education. I am a fan of chocolate. My preference is dark chocolate. Milk chocolate is watered down chocolate. So dark chocolate, ideally 70% cocoa solids. I did direct a chocolate food of the god conference, and I have to add it contained an all-chocolate banquet and a performance of the Chocolate Soldier operetta. It was a lot of fun.
Wow. Okay, so let's move on to your dreidel collection. I want to know, do you or your family use any of the dreidels in your celebration of the holidays?
It's actually interesting that you would mention that because I spent all of Labor Day weekend polishing the 400 dreidels, which is a total pain, and I do it as infrequently as possible. We may take out one dreidel from the case that has all the dreidels. We don't play with 400. They basically are just there. And the way this came about is as a kid, I had a dreidel, a wooden dreidel that was just wearing out. So I went shopping for a dreidel and bought a beautiful silver dreidel. So I started shopping for another dreidel and another dreidel and another dreidel, and that's why you get to 400.
All right, our final bullet poll question, Kate or Willie?
Oh, tough. Really, really tough. Since I spent a lot of time with Kate and Willie when all our students were moving into the residence halls, I hit it off more with Kate, I have to admit.
Okay, you heard it here first. The provost prefers Kate. Thank you so much, Herman, for joining us today. Once again, we are broadcasting from the studios of WRHU, Radio Hofstra University, 88.7 on your FM dial. Thanks again to them for their help and support, in particular to Kenny, the station manager, who acts as our engineer. Thank you, Kenny.
Thank you, Kenny.
All right, so stay tuned. We will be back in a couple of weeks with another edition of the Hofstra Votes podcast.